Welcome back to the Inside View Real Estate Podcast, guys. Today is a very special episode. We are going to show you how to have access to private money with one of our preferred lenders. Stay tuned. Guys, welcome to the Inside View Real Estate Podcast. I am your host, Josh Zuniga. Today, we have a very, very special episode. We are with my good buddy, Brendan Ochinero.
Yep.
Ochinero. Earlier, we were saying Ochinero, like it was Japanese.
Yep.
But he's been a good friend of mine, and he's also with Renovo Financial, correct?
Yep, that's correct, yep.
Yeah. We met, what was it, 5, 6, 7 years?
6 years ago, yeah.
5, 6 years ago. We were introduced through another buddy of mine.
Yep.
And there that goes, right?
Yeah. Right on cue.
We were introduced to another buddy of mine who saw that I was doing quite a few projects here within the Valley.
Yep.
And he gave me your contact information, said that we'd actually be a right fit for each other.
Yep.
Give me a little background on what that conversation really started and you know, what you were doing back then, 5 years ago. Give a little background on it.
Back then, I was working for a different lending company at the time.
Okay.
Since then, evolved to starting my own lending company 2-3 years ago.
Yep.
And then that evolved actually during COVID, early 2020. Into who I'm with now, Renovo Financial.
Right. So, guys, just so we're clear, so Brendan offers money to investors.
Yep.
And a lot of the industry terms, you know, within real estate, we call it hard money.
Yep, hard money.
But, you know, I think it's kind of got like a little bit of a bad rap, a little bit of a bad name.
Yeah,
Let's leave that down. It's all good.
Yeah,
guys.
hard money gets kind of a stigma within the industry. I think we were just talking about it comes from like hard terms.
Yeah.
Or
nasty rates.
Yeah.
Yeah, the
stuff like
22%, let's go.
old school type stuff. But, you know, the industry's evolved over the last probably decade or so. Pricing has come down a lot with the institutional money coming in and all the money coming in from the economy.
Right.
More of a competitive environment and market right now.
Yeah.
So terms are not nearly as hard as they used to be. They're almost like quasi bankable.
Right. And I think that's really good and that's really promising to hear. You know, being a flipper myself, you know, I've learned how to flip houses, you know, from my father and my family. Pre-08.
Yeah.
So when I was in high school, I was like, perfect. My whole plan was, you know, I'm just going to start getting into real estate, get my license at 18, and I'm just going to start flipping houses, and here we go.
Turn it on.
Turn it on. But obviously 08 happened, and my 10-year plan was absolutely crushed.
Yeah.
So like a lot of people, we just had to go, you know, with plan B, decided to go to finish, you know, college, graduated at ASU.
Not a bad plan B.
Not a bad one. We did corporate will for a couple of years, but I knew that I was always going to go back into real estate, right?
Yeah.
My first day at corporate, I knew my first day was my last day.
Yeah.
I always had real estate as part of what my overall plan and career was going to be.
Yeah.
But also a part of that was going to be flipping. And having partners like yourself, especially if you're going to get into this industry, is vital, right? Because a lot of the guys, you know, even just starting, if you've never even done your first flip, you're going to need an individual like Brendan. You're actually going to need Brendan himself, you know, to get these deals financed.
You need a good partner.
Exactly, right? Because the biggest thing before you even find the deal, you need to have the conversation of how you're going to be set up, you know, for the financing part.
Yeah.
So give a little example if somebody wants to get into flipping and they want to have a meeting with you, what they should be expecting and like what are some of the requirements that you want to see, you know, from some of these borrowers?
Yeah. So there's two different categories we basically look at.
Right.
And there's the deal itself, the property itself, and then there's actually the borrower, the sponsor who's borrowing the money. So in terms of the property itself, you're looking at purchase price, rehab, ARV, turn time, how long it's going to take you. And then you look at metrics from there, how much the down payment is the interest accruing only on what's dispersed, is the interest accruing on the full loan amount, that sort of stuff. And then as a borrower, we're looking at a few different things. It makes up your credit profile, we call it, your credit score, your FICO,
right?
How much liquidity you have on hand,
okay.
What your net worth is, and then also your experience level.
Right.
And so those, you know, handful of items make up your credit profile. We pair that with the property, make sure that the two actually make sense as a pairing, and then we're off to the races from there.
Okay, wonderful. Well, so say you have an individual that is just getting started and they have no experience.
Yeah.
So how do you rate those compared to a guy that's done, you know, dozens or maybe 5 or 10, you know, properties? What's the difference between beginner to experienced?
Yeah. So we categorize it as 0 projects, 1 project, 3 projects, 5 projects, or 10 plus projects.
Okay.
And that's all in a 24-month period, 2 years.
Okay.
If you have 0 projects or 1 project, what we normally do is it's always good to piggyback on someone that does have experience. So
mentor, yeah.
Create a mentor, have a operating agreement that you're a part of so you can get your own track record rolling on.
Okay.
But if you can't do that and you're on your own, the best thing to do is, for us, is we mitigate that by down payment size.
Right.
So maybe instead of the 10% down payment, which is like a rock star, you put down 15% or 20%. So that mitigates our risk a little bit because it's a newer borrower.
Okay.
And also the rate increases a little bit because you can't get the rock star rate if you're just starting out.
If you're not a rock star.
If you're not a rock star yet. You might be a rock star in your head, but you're not a rock star in the industry.
You got to prove it to us, essentially, right?
Yeah. And it's good, every project doesn't have to be with us. We like to be good partners. I want your business to win. I want our business to win. But it doesn't mean we have to do every single deal together, as much as I would like that.
Okay.
I think if our product fits your product and it's a good match, then that's the right situation for both of us. Right.
And that's obviously great information, especially for a lot of individuals that have maybe seen some of my content, that see a lot of other flippers out there. Mm-hmm. I think there's going to be maybe a shift in the market coming on pretty soon to where you're going to start seeing a lot of price reductions, people trying to just off-sell their properties. Yep. So having a partner like you is going to be, awesome, 100%. On the back end to be able to finance, a lot of those deals.
Definitely. And to dive a little bit more into that too, during COVID, a lot of lenders locked up their financing. Yeah. And they stopped funding, and deals that were in escrow fell out real fast because they couldn't get the financing. Renovo never stopped funding deals.
That's beautiful.
Ever. So we're a good partner for that kind of situation. We think one of our strengths is kind of like a stormy or rocky market. Okay. Because I think we excel in that kind of environment.
I'm glad you brought that up, because I had 2 projects that when COVID happened, I was just like, oh man, this is going to get nasty. Thankfully, they were, we just started them. So by the time we were finished, the market kind of settled, people got back into it, and we were able to sell them in June and July.
Awesome.
But when I talked to my guys, because I had some other opportunities, I was like, one of them was, his name was Barry Lacho. And I was like, Barry, what's the market look like out there? He's like, Josh, we are completely frozen, and we are not moving any money right now. Yeah. I was like, our investors and our financial backers, our institutional backers, are having meetings weekly and bi-weekly, and all I can do is just give you updates. But at this point in time, brother, I was like, we are funding no deals. Yeah. And I'm like, holy smokes.
That definitely happened. Yeah. I mean, people were getting their warehouse lines called on, and if you didn't have the money prepared to pay them off or give the money back, you got stuck with an issue.
Yeah. And that's scary, right? Yeah. And that's scary. So to know that you guys would obviously weather that storm and still be financing deals is a beautiful thing. 100%. I didn't even know that. Yeah. So that's wonderful information for you and I, right? Definitely. And I've given you a couple of deals as well, and I've given you some other referrals as well, which is awesome. And it's been a
thank you for that.
Yeah, absolutely, right? It's been a fantastic experience. Let's go back to the property, conversation. Yeah. Are there properties that you'll look at? Say obviously you have a good purchase price, and how deep are you getting into the minutia of what the ARV is, what you're putting in as far as the property? Do you guys hey, you guys are over leveraged on this one? Do you have those real conversations with your clients?
And as a good partner, I don't want a loan just to have the loan. I want to have a loan because it's going to be successful and we can do the next one. Right. If this first one falls apart, the chances of us doing a second one together is not very good. Right. So we're looking at details not to only cover ourselves, but also cover you. Okay. And make sure that maybe I'm missing something that you're seeing, or I'm seeing something that you missed or something like that, but we should both be looking at the deal analytically and making sure that it's good for both parties to move forward. Yeah. So we dive really deep into geographies and market data and appraisal values. We're looking at all that stuff on every single deal. Okay. We have a strong credit culture, and it's almost formatted as a bank, but not with bank terms and not with bank restrictions and not with bank boxes. But we treat every loan individually, and we discuss almost every single loan, especially over X amount of dollar size. Mm-hmm. So we're looking at every deal pretty in depth.
Okay, that's good. Are you? Do you have obviously you have your own underwriters that you use personally, in house, that you guys review the deals with, right?
Personally, in house, yeah.
Are they the ones going out there and giving those values, or pulling those values and that information, or are you requesting it from your investor partners to at least give you some type of data to go based off of?
So good question. Each one of our markets, we're big on locality. So everyone has to be local to their market in order to be lending money out in that market.
Okay.
So we go deep with our borrowers and we go deep with our locations.
Right.
In terms of underwriting, each individual, we call them pods. It's the operation pod basically for your market specifically, has a senior credit analyst, basically an underwriter.
Okay.
And that guy's job is to double check everything we're seeing from however we obtain the value, whether it's an appraisal, BPO, desktop review, whatever it might be. Their job is to like double check that simultaneously at the same time to make sure we're seeing the same thing on both ends. So it's like a safeguard.
Right.
And then my job is to know the market really well too. So I'm looking at it, and usually I can tell pretty quickly if a deal makes sense or not because I've seen a lot of them.
Right.
But we got multi-layers trying to figure this out, and you've seen how quick we work. Sometimes we can do it in like 5 days, start to finish.
Yeah, it's been awesome. Like, everything that I've been involved with, especially even talking to your gals, even working with you, even working with you guys that are managing it through the project, has been fantastic. The customer service has been amazing.
Thank you.
The follow-up has been outstanding. Even like the gift you sent me, the little Italian box, that was a fantastic. Sabri still has to, cook it for us. Totally kidding. I probably am the one cooking it, but it was great.
Thank you.
But there's a wonderful product that I really want to share, especially being a flipper, is tell people about your renovation loan that you guys offer.
Yeah.
A renovation reimbursement product.
Yeah.
That's huge, guys.
Yeah.
You guys need to pay attention. Okay.
So obviously when you buy a fix and flip or an investment property, you got the purchase price and then you have the rehab and you have the construction loan that you need in order to make the repairs to the house, right? What we do is we provide a certain percentage of the purchase price, but then we provide almost in all cases 100% of the construction money that you need to do the project.
Okay.
And we hold that back in what's called a fund control.
Right.
And that money is allocated specifically for you for that project for the term of the loan. In our case, it's not accruing interest while you're not using it. So that's a huge one.
That's huge.
That is a huge one.
A lot of lenders do as soon as you tap into it. Now they're charging interest on that full amount.
And it's just on what's dispersed. So you do $10,000 with the door or whatever, windows or flooring. To go back to the draw question. We do everything over video now.
Yeah.
So it's like Zoom or FaceTime, but a proprietary app that we have for Renovo connects you directly to our construction manager, who's actually in Chicago. It's either Joe C. or Peter Post, and they specialize in my market specifically.
Okay.
And you want to do a construction draw, you go, hey, Joe, I'm going to be at the property tomorrow, 11 a.m. Can I meet you on Zoom? He goes, yeah. You walk around the project with Zoom, show him what you're doing. He goes, looks like you're doing what you're telling us you're doing. Can you send me an invoice? Just show me materials or whatever. You go, yeah. Wires at your bank account the next day.
Okay. That's amazing. That's fantastic. So how many draws are you allowed to have within each project?
It's unlimited.
Oh, it is? Okay.
There is a small fee for each draw, so it gets netted out of the draw. So $200 if you take a $10,000 draw, you're going to get a $9,800 wire.
Okay.
So it's $200 for Joe's time. And you can take as many draws as you want. Having experience, you and I know each project, depending on the size of the construction holdback, should probably have a certain amount of draws, just because you don't want to overding yourself. You want to have a game plan. You want to have a strategy and say, right, I'm going to do it in 5 phases or 3 phases and chunk it out like that.
Yeah.
So we welcome as many draws as you want, but I think it should make sense for you mostly.
Yeah. And guys, just to give you like some context on how I work and how I operate with it. I always usually buy my materials on the front end.
Yep.
So my first draw is usually overloaded.
Yeah.
Because it'll have obviously the purchase, but then within the first week, I buy every single product that I need for that house.
Yep.
From your tile to your appliances to I put the cabinet order in to all the baseboards to all the paint. Everything that we need for like all the fixtures and all the hardware. All of that is done within the first week, and then I leave it within the garage, so the guys are just picking and pulling.
Perfect.
So that they don't have to call me whatsoever. If they do, they call me from Home Depot. I give them a credit card, but I'll usually have the first draw, and I like to break it up in like 30, 30, 30,
I like
10.
that too. Yeah. Okay.
So I'll usually request 30% up front, and I'll show them right after demo. These are all the materials. These are all the receipts, right? And then usually after the flooring's done, then we'll do another draw. And then once cabinets are in, the product pretty much flies through. And then the reason why I leave the last 10% is because I do a blue tape walkthrough with my GC to make sure everything's all good. because usually I'm paying him like probably like a 10%, you know, cut on that too.
And you got that back.
And it works out. Yeah. And you said do you guys do inspections? I know some lenders do some inspections, or that's the visual part.
That's just the visual part over video. Yeah, it's super easy, no problem.
Yeah. And mention appraisals. So at which point do you do appraisal? Do you do appraisal for every property, or is it case by case?
Case by case. Definitely on new construction, because it's a different kind of project. There's usually inherently a little bit more risk when you're just lending on land to start with. Yeah. So we like to get appraisal on new construction. Anything over with an ARV after repair value of $1.5 million. So that product too. Multifamily 5+ gets a commercial graded appraisal. Okay. And then anything under 1.5 million ARV gets a BPO, which is just like a broker price opinion. Right. Basically a desktop review.
Okay. Yeah. Wonderful. That's fantastic. How about, I know you mentioned a little bit more about rates, or do you feel comfortable talking about what you would be doing? All right, let's go for it. Like, so guys, if you guys are looking to do some investments here, just so you guys can have a good sense of like the kind of rates you would be receiving, obviously Rockstar's going to get the preferred rate, right? But you also have to have a track record, but it doesn't mean that you should count yourself out. I always recommend, if you're going to get started in the game, you have to get started and do it now, right? Get your feet wet, get your experience. You know, Brendan brought it up as a key point. You need to have a mentor, right? You need to have a mentor. Everybody has one. I had one. Don't go into your first project thinking, I got this, I'm smart enough, I'll figure it out. I've seen people do that, and they have lost their ass, okay?
I've seen it
right?
too.
They lost their ass. Your first deal can be your last deal. You'll be so discouraged, and you'll be sometimes even broke because you went in over your head. This is a business. This isn't HGTV.
Yeah, I was just gonna say, as much knowledge as we're spitting on these mics right now, don't take everything from YouTube. Don't take everything from Instagram. You need to have a true real life mentor helping you along the way as well.
Absolutely. So go back to rates, beginner rates.
Yeah, beginner rates. Generally, when we talk about rates, I say I'm very competitive, ultra competitive. Do I want to necessarily be the cheapest guy all the time? No, I don't want our business to be built around cheap pricing. That's not really what it's about. I'm not going to be the highest price guy either. I definitely know that. I'm going to be ultra competitive within 25, 50 basis points of the best stuff out there. Yeah. And I think, like you said, our service and our quality, and not even that, but like the value play, like we talked about stormy waters, you know, rocky roads. Like I think we bring a really good value prop to a lending partner. Yeah.
What size projects do you like to, I know you guys take, some pretty extensive and big ones, but what's normally, give us a little breakdown of like the size of projects you normally see and also have the potential to go up to.
Yeah. We used to have to draw a line at $100,000 for a loan, but these days I don't know if you're finding a house in the areas that we're lending for $100,000 anymore. Yeah. So I would say it doesn't matter how small it is anymore. A good purchase price is a good purchase price. Obviously keep it over the $100,000. Yeah. In terms of how big we can go, we're going pretty big. Single family homes. We're funding one next week in the $5 million range.
Custom.
Custom. Yeah. Yeah.
Okay.
Yeah. And we can go all the way up for 1 to 4 up to $10 million. $10
million. Yeah. And that's all. You say multifamily, new construction, single family home.
All that stuff.
All of it.
Yeah. Okay. And we can do multifamily bigger than that. It just has to make sense, like a price per unit.
Yeah.
Wise and all that.
Just gotta make sure it pencils out.
Yeah.
Okay. Wonderful. Yeah. Wonderful. Is there any additional new stuff that you guys have coming out as far as new programs or anything that you think would be really important for investors to really know? The one that I love with you guys is that you guys are lending out on 30-year terms now. Yeah. Let's talk about that.
Yeah. So actually we do a 5, 7, and 10-year ARM adjustable. For more experienced borrowers, we can do that with an IO feature. So interest only on a 5, 7, or 10. Which in markets, I focus on Southern California as well. Right. Cap rates there right now are a disaster. They're super compressed. Mm-hmm. So the IO feature kind of allows you to boost the DSCR, the debt service coverage ratio, a little bit. Make sure you get over we need it to be over a 1 for 1 to 4. And on a 5, we run it off an NCF, a net cash flow. Right. And that needs to be over 1.2. It's probably a little more involved than you need to know, but what were we going back to?
The 30-year fixed.
Oh, the 30-year fixed, yeah. Yes. So 30-year fixed, up to 80% loan to value. Rates for that are generally like 100, 150 basis points over what conventional or traditional financing is doing.
Okay.
Right now we're seeing in the 6s, but we can be diving back into the high 5s for that product right now.
Okay.
The 30-year fixed has a 5-year prepay, but it kind of works in a waterfall where if you pay off the loan in the first year, you get a 5% ding on the loan amount. Second year, 4%, third year, 3%, fourth year, 2%, and fifth year, 1%.
Okay.
So you want to really have that game plan if you're going to hold this asset for 5 years or longer. 30-year fixed is a great move. And I think we're really competitive in that market too.
Yeah, because there's a lot of investors that don't even offer that, or private money.
Yeah.
I'm sorry. Yeah, private money doesn't offer that. You're the first one I saw come through, and I get a lot of emails, from a lot of these guys.
Yeah.
So I was very excited to see that.
Well, and the great thing about that one too is because if you did the fix and flip product with us to start, and you want to refinance out into the 30-year fix and make it a long-term rental play, or some cases Airbnb, it's a great place to be because we already know you as a borrower. We already know the loan because we had it. And we can just transition it quickly into that 30-year
Easy
fixed.
segue for you guys.
Yeah, easy.
Wonderful. Well, guys, it looks like Brendan has a lot of products, a lot of value to offer, and the most important thing that I love is he's very family oriented.
Thanks,
Customer
Josh.
service is by far some of the best I've seen. Right, and you're a family man.
Family man, yeah.
You just had a baby, right?
Just had a baby, yeah.
Nice. Tell us a little about that. Tell us about the dad life.
Yeah, 6-week-old Shiloh Sophia.
Love it.
Born in San Diego, and we're just having a great time taking care of her right now.
Yeah, and you just welcomed her to the Arizona, beautiful California breeze over here.
Yeah, a little 115 degree.
115 degrees on your visit.
Yeah.
Oh my goodness, that's exciting. And then you said you just teed off on some golf this morning?
Yeah, I played a little golf this morning.
A little sweaty golf.
Sweaty golf.
6 water bottles deep, first hour.
Oh man, it was tough out there, but it was a good time.
That's awesome, man. Well, I'm so happy that you came over to Arizona. I'm so happy that we got to, we're going to go have dinner after this, and, share some family time.
Yep.
Thank you so much for, being a part of this podcast. You've given so much value, not only to myself, but to all the listeners and viewers that are actually watching the show. And I can't wait to be back in California. Maybe we're going to do podcast episode number 2, with Brendan Ochinero.
Yeah, we'll do it out in San Diego.
Fantastic. We'll do it. Until next time, guys, thank you for watching the Inside View Real Estate Podcast. We'll see you on the inside.